I'd like to ask all our managers, where are you seeing opportunities and risks in 2021 and beyond? And I'd like to start with Joe, please.
Yes, in terms of opportunities, I think the UK market is quite interesting at the moment. It's underperformed world markets quite significantly over the last 10 years, and that pace of underperformance became more rapid after the 2016 referendum. And I think it has been shunned a bit by global investors, even though our large companies are FTSE 100 index is very global. But I think people, in surveys of fund managers, people have been very reluctant to put money into the UK. Of course, we don't have, by any means, the number of great growth stocks you can find in the US market and some of the other markets. So, that is a factor. But even if you compare our companies in their sectors with overseas companies, we are cheap. And that was well illustrated in November by the bid for RSA, an insurance company. And this was bid for by a combination of a Canadian and Scandinavian insurance company. And they're both paying for RSA by issuing much more highly rated paper. They're much more highly rated in their home markets. So, I think the UK, could be an interesting opportunity over the next 12 months. And then risks, I think people have been sort of paying up for growth. I think, and it's been well rewarded. I think, obviously growth as a theme has been really dominant. But sometimes these trends don't last forever. And I think the sort of valuations in some parts of the market are very high. I mean, when you've got ultra low interest rates as we got at the moment with very low 10-year and longer bond yields, it is quite supportive of that. But if that kind of backdrop was to change, I think, some big profits in some of these stocks. And I think there is a vulnerability there, in my opinion.
Thank you very much, Joe. I really hope you're right. In the UK is an interesting opportunity in the next 12 months. Simon, where are you seeing opportunities and risks in 2021 and beyond?
Well, I think clearly with the threat of the coronavirus receding, there are going to be a lot of benefits to those industries that have suffered greatly, including travel and leisure. So I think that as that occurs, that could provide a boost to a lot of those industries. But I would caution that I don't think it's going to be a smooth path. I think there are going to be a lot of bumps in the road to recovery, simply because the logistical scale of trying to give vaccines to billions of people, some of which in terms of vaccines are very difficult to store and transport, and also in terms of the people, many of which don't even want it. So I think it's not going to be smooth sailing, and I think that there will be moments of uncertainty, which we all know the market doesn't like. So when we see that, I think we will see volatility along the way. But generally, I think the trend will be positive over the next couple of years for some of those industries that have suffered in 2020. Second, I think the new Democratic administration in the US could prove to be very interesting. What we tend to find through history is that new Democratic administrations tend to lead to strong equity markets in their first year. I wouldn't necessarily say that that's going to happen this time, simply because it tends to follow a lower year for equities when the Democratic president is actually elected, which we haven't had this year. It's been a strong market with the S&P 500 up 15% this year. But the history tells us that it tends to be okay in the first year of a Democratic administration. So we'll see if that plays out again this time. And then in terms of risks, I think we shouldn't forget that a lot of asset prices have been driven by the global coordinated monetary policy that we've seen from central banks and the unprecedented expansion of balance sheets through QE. And I think that any moderation or change in that will affect asset prices globally, not just the equity market, but certainly will have a meaningful effect on the equity market.
Thank you very much, Simon. I certainly hope you're right about travel and leisure. I would like to get back to normal again and actually have some fun. Charles, where are you seeing opportunities in risk next year and beyond?
Well, Annabelle, I hope you'll forgive me if I'm slightly irritating and take gentle issue with the question. First, because I always try and think ahead 5 years or more rather than focus on the short term. So I honestly admit that I wouldn't be much good at 2021 predictions. And secondly, because I think investors tend to spend far too much time and energy worrying about the risks and not enough about the opportunities. And the great thing, of course, about equities is the asymmetry which they offer. You can only lose 1 times your investment, but you can make many, many multiples on that investment if things go right. So we try to see the opportunities everywhere across industries and across markets. And of course, the joy of a global mandate is this ability to go anywhere. So I see the opportunity to double our money in pretty much every stock in the Monk's portfolio over the next 5 years. And if we conclude that the odds of that happening fall below 1/3 for whatever reason, then we will sell it and move on.
Well, Charles, I really hope you're right. I like your optimism and I like the fact you're looking for opportunities. I'd like to thank our managers very much for joining us today. It's great to hear their views on the pandemic and the outlook for 2021 and beyond. But I'd like to emphasise we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. All that remains is for me to wish you a very Merry Christmas and a Happy New Year. Thanks so much for watching.